What are you recommending for somebody buying their first property, or maybe in general, I guess, fixed or variable?
And yeah, let's talk about whether it's a regular first-time home buyer or investor.
Yeah.
Sure, yeah.
First-time home buyers tend to look at the mortgage payment more than anything. All right. That's what sells the client on the property. It's the payment. It's what's the monthly payment on this thing, right? And if it's affordable, then we'll consider it. If that's how you are, and that's, again, there's nothing wrong with that, right? That's security, safe. I want to know what my payments are going to be. I don't want anything to change. I'm committing to this now. I'm stretching it, but I just want comfort. That's a fixed rate. That's a fixed rate all day long. Okay. First time home buyers, 90% of the time, depending on the market. I mean, listen, the last couple of years might've been a bit different. Maybe you didn't want to take a 5-year fixed, but we're getting back to a time where a 3 to 5 year fixed rate, you're getting decent rates, 3.5%, to 4%. You're getting decent rates on an owner occupied, whether it's insured or conventional. So a first time home buyer, unless they had an appetite for risk, I would likely suggest a fixed rate just because of the comfort that comes with it. Okay. Now listen, when you're taking a fixed rate in a time like this, where people feel maybe rates may come down, and we could talk about that later, you run the risk of, well, in a year from now, fixed rates might be lower than what they are today. Mm-hmm. But that's just a pill. So that's the gamble of taking a fixed rate, right? You lock in the payment now, you don't have to worry about it. Because if it goes the other way and rates start going up, you're going to be super happy you locked in. So first-time homebuyers, for sure, fixed rates. Now, when you're moving more into a seasoned buyer, maybe somebody who's selling and buying or an investor, you could certainly make the argument of a variable rate. Okay. And the reason why somebody might take a variable rate, again, this answer, always important. I timestamp these because 2 years ago, I'd have a completely different answer. And maybe in 2 years or 6 months, I'd have a different answer. But you could certainly make the case right now for a variable rate.
This fall, the Empire is back, but so is the Resistance. On Saturday, October 18th in Mississauga, it's the Your Life, Your Terms event, Ontario's most energized gathering of real, in-the-trenches investors. This is the Resistance in action. 1 day of real strategies, fresh ideas, and new allies who believe in living life on their terms. The lineup, out of this galaxy. Ben Rabideau with the sharpest real estate and economic data. Tom Karadza on global forces reshaping Canada's future. Nick Karadza on the money revolution changing finance forever. Dave Butler with 5 game-changing investor mortgage programs. A powerhouse panel delivering blunt, on-the-ground real estate insights. Tom and Nick on launching and scaling income streams for freedom. Dr. Caitlin Link on taking control of your health and fitness. Past attendees call it a must-attend, electric, and say they've walked away with tens of thousands of value from a single day. Ticket prices rise as the event gets closer, so the earlier you grab your seat, the more you save. Some tiers include extra bonuses you don't want to miss. So the question is, will you sit back while the Empire makes it harder for everyday Canadians to get ahead? Or will you join the Resistance, take your seat, and rise above the system? Go now to yourlifeyourtermsevent.com and grab your ticket before it's gone. That's yourlifeyourtermsevent.com before ticket prices rise. If you're a Rockstar member, your ticket is free.
Now, why? So let's say your standard conventional purchase right now is somewhere between $399 and $429. Okay, just depending on the bank. That's like you're buying with 20% down. That's a fixed rate. Well, a variable rate today would be, give or take, 4.25% to 4.5%. So slightly higher. But we're in a market right now where most economists, we put out a newsletter, we talk about this stuff, we go to events, we go to the Rockstar event, we listen to Tom and Nick, we listen to a lot of different people. And most people believe that variable rate will have to drop. That prime rate will have to come down, whether it's a quarter point, whether it's 50 basis points, it's going to have to drop. And if that does, that will bring most variable rates down to 4.25%, because remember you're at like 4.5% to 4.25%. So you might, if they come down 1/4 to 1/2 point, you're going to be somewhere around 4% to 4.25%, which puts you relatively on par with where the fixed rates are today. So that makes it a tough decision. Yeah, I was in here literally as soon as I got here. One of the guys here helping him with a mortgage, and we had this exact conversation. So the variable rate is attractive because we think it's going to come down. But even if it drops 1/4 point to 1/2 point, it's going to be roughly on par where with fixed rates are. But one of the advantages of variable rate that a seasoned investor or a seasoned buyer might like is you can always convert your variable rate into a fixed rate. So if you were of the belief that variable rates going down, and I think fixed rates are going to come down too, because remember, you have to remember, they don't always move in the same direction, right? If prime rate comes down, that doesn't mean fixed rates are always coming down. Fixed rates can sometimes move in the opposite direction. And we've seen that. Here we are in October, I had to date it again, in October. And for the past 6 months, we haven't
September.
September.
I want to keep that date.
Yeah. Sorry.
Because we have an
We're
announcement.
September.
Yes.
We do. We
I
have
was
an
going to leave it,
announcement
but that's
coming
a good point. That's
No, 100%. So here we are in September. It's been what? When was the last rate drop?
Was it November?
Yeah, it was last year, right?
Yeah,
so we haven't seen anything this year.
Yeah.
So fixed rates have slowly been going up. So we're at a time where prime rate hasn't moved, but we've seen fixed rates go up. So my point is they can move in different directions. It's a bit of a gamble. But if you were the type of buyer that believed fixed rates are going to come down, you're following the economy, you're following the bond yields, you believe fixed rates will come down, you could arguably take the variable rate for now, ride it down as prime rate gets the reductions, and then convert that variable rate into a fixed rate if fixed rates are lower in 6 months. Now, again, the gamble of that is, well, what if fixed rates are higher? Now you're in the variable rate and you can't lock into a rate that you had before. So it makes this decision a very tough decision in this market. It's not an easy decision. You could certainly make the case for a 3-year fixed, 5-year fixed, and a 5-year variable in this market. A lot of it just comes down to what is your appetite for risk, Anthony? What do you want? Do you want just to lock in the payment, not have to worry? Maybe in a year you realize, I could have got 379 or 389, but I took 399. Are you really going to kick yourself over that? Mm-hmm. Right? Whereas if you take the variable rate, we think it's coming down. What if it doesn't? What if it goes back up? We don't know. That's the gamble.